push me, and then just touch me, till I can get my satisfaction. 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 Satisfaction.
Push me.
Ladies and gentlemen, what is going on? We have Benny Benassi pumping in the speakers this evening, and bingo bango, we've got it going on. We are ready to chart, and we are ready to review what are the possibilities of occurring this week. Now, we already know if we look at the futures, holy moly, we're already up 2% in the Dow, 2.4% in the NASDAQ, 2.5% in the S&P, and 2.8% in the RUT. Now, with all that in mind, we are up a lot for futures. There's also a lot of volume, more volume than normal running through the futures as well right now, especially in the NASDAQ futures. The main thing that I'm looking for is this not to get faded tomorrow. Just to review this very, very quickly, because this is not going to make up most of the video tonight. I don't want this to get faded tomorrow. If you want to see any kind of market strength throughout the rest of the week, you do not want this to get faded. You want this to continue to either get a bid up for the rest of the day and possibly push 250, 260 on the close, or you want to see it at least settle out above 200 or above at least 180. But again, a positive market is a good market, especially on a Monday. Merger Monday, we'll see what kind of mergers come out tomorrow. But again, this is looking very, very promising for the NASDAQ 100, especially up 2.5%, taking the biggest hit last week out of all the indices, especially the Russell. The Russell was another one that took a really large hit. So this would be good for small caps, and I am very anxious to see what occurs tomorrow after all of these, after the futures really settle out and the market opens at 9:30. So let's review what the possibilities are going into this week. I do have a couple charts set up for this evening. The ones that we're going to go over are on the left. However, I've picked a specific amount of those. Tonight we're going to be going over the XLY, XLP, XLE, XLF, XLV, XLI, XLB, XLK, KOL, and KRE. So let's start with XLY. I did do a Fibonacci retracement on these. Most of the spider sectors I did a Fibonacci retracement. If not all the spider sectors, I did a Fibonacci retracement on. I think XLF is the only one that I didn't do one on. But XLY right now is sitting on the 100-day still moving average as well as the 61.8. Sort of trading in between 61.8 and 78.6 on the Fibonacci retracement. So a lot of these points that we're going to possibly click off of and touch upon right now are Fibonacci retracement areas. The best way to really gauge yourself on a lot of these large drops that we had pretty much throughout the entire week, but mostly on Thursday, that spurred this large, very, very large drop. The main thing that I am looking for is to find some kind of support that holds, and I think tomorrow we're going to be able to at least set aside some kind of support level in the markets. That would be something that would be really, really fantastic to see, some kind of support to at least have a gauge as to where we can go in the future. Tomorrow's a very important day. It's very, very crucial. So to watch your technicals and watch your support and resistances is very, very important if you're planning on trading at all this week, whether it be day trading or swing trading. So again, this is sitting on the 100-day simple moving average. Huge volume distribution flowed through XLY last week. You can see it right here. We broke above this area, and we even broke highs from this last dip at the beginning portion of 2008. So we touched upon 30 million shares traded on a daily scale here for 2 days in a row, and we traded above 25 million daily shares traded for 3 days in a row, which was very, very significant and did cause this short-term tank below 36 Again, if you saw the video prior to this one, I think it was like beginning of last week, if not about a week and a half ago. If we got above 36, we were going to go to 40. So the market was on the verge of making a big move, and it did move to the downside. This is okay, though. We can deal with downside pressure. I'm perfectly fine with downside pressure, and here's why. It allows the charts that are overrun. Just to name one, and we're just going to push to this one. This chart was overrun, and a lot of traders knew it. We were waiting for a pullback to get into it, or we were going to wait till this pop to 25. So we were sitting on the verge of something that could have either exploded to the upside or just collapsed to the downside. We did see a collapse, some of it because of earnings, some of it because Cree got absolutely whacked. Some of it was because of common shares offering. But for the most part, we're seeing these overrun plays that we were watching. We were waiting to set up either the upside or the downside that we're going to break out or break down. We saw a lot of these breakdowns. So now we are setting up, and we have to allow these tickers some time and these companies some time to set up a good technical trend that we can trade off of. Again, XLY sitting on 100. That's the main thing you need to know here. The 100 and the 61.8. Fibonacci retracement level, and we need to watch volume distribution at least taper off, if not be over flooded with volume accumulation, and then see volume accumulation taper off if we get a low volume rise here in the XLY. XLP, very similar situation. XLP was actually driven down to 25 in that 15-minute time span when the market got absolutely shellacked. If I may use Quinn Tatro's word, shellac there. I did just watch his tape talk, which was absolutely phenomenal. I do recommend that if you're watching this, and if you didn't watch Quint's tape talk yet, please go do that. He also spouts out his version of a lot of these spider sectors, as well as KOL, maybe KOL, but he definitely does discuss Cree for a little bit as well. Again, definitely a technical analyst. Total technical guru. I highly suggest him if you're not following him on Twitter at Tickerville.com or at Tickerville. And if you want to follow him through his website, Tickerville.com. Anyway, XLP also saw some heavy volume, but it did stay in line with this descending volume trend line. If it doesn't break 12.5, or it doesn't really, if it doesn't break 12 million daily shares traded, I think that it can stay above the 200. But again, tomorrow is going to be a very key turning point for the markets. So I'm very excited to see whether or not we can hold the 200 and pop higher, at least the 100 day, and try to find some kind of support within XLP. But right now we're looking at the 200, and we're also looking at the 61.8 Fibonacci retracement as a support level. There is a head and shoulders. The neckline's at 26, the shoulders are at 27, and the head is at 28. So if we do get a bid up to 27, I'm looking for a break at above 27 to confirm more upside. XLE is looking pretty friggin' ugly, not gonna lie. We broke down below all of the major simple moving averages that I watch. We've seen the largest volume that we've seen since March of 2009. And we haven't seen that in over a year and 2 months. We haven't seen this kind of volume. We just saw it this past week, and we don't even have a lot of support. So if 54 doesn't hold, and we really need to watch volume. Volume is very crucial in XLE. If we see any kind of any more distribution that we have already had, I think the sellers and the bears can really drive distribution here to at least 70 million daily shares traded. At least up to that level, and I think we could have the possibility to see 50 on here, and that's 50 to 52 is really 50 to 53 is really the next big support range. But if 55 is not held on XLE, 53.75 is next, and below that you're sitting at 53.50 and 53. I'm sorry, I said that wrong. 53, and 50. 50 being a 23.6. Fibonacci retracement. But mainly what we're looking at here is a breakdown. If we can get any kind of bid higher and we see 55, 54, 75 hold, that I think that's all we can ask for being bulls in this market.